Hi, thanks so much for tuning in. You're watching BQ Prime. This is an earnings conversation, and we're focusing on Nazara Technologies. I'm looking at the full year numbers, and it's quite a pretty picture if you look at it. Revenue growth of 75% for FY23. You have an EBITDA growth of 16%, the PAT number standing at 61 crore rupees. We'll also focus on the fourth quarter and the outlook for the new financial year. Joining me is the founder and chief executive officer of the company, Nitish Mittersain. Thank you so much, Nitish, for taking the time. I will begin by a broader question, and then we'll delve a little deeper into the key business verticals. As we end this financial year, or now that we have ended this financial year, and as we've entered the new financial year, what are the key highlights that you're focusing on, and what are the key elements that you would like to focus on in the new financial year?
Sure. I think, this FY23 ending has been on a good note with 75% revenue growth. We started the year by saying that we're going to focus on aggressive revenue growth backed by profitability, and that's what we have achieved. Now, we've prioritized growth over margins, but at the same time, we maintain 10% plus EBITDA margins. Largely, all our businesses are profitable and cash flow generating. So I think we're very much on the strategy that we had kind of laid out at the start of the year, and happy about that. The three segments we're operating in, gaming, esports, and AdTech, all have grown well for us. And we believe all these three pillars of growth will continue into FY24. So we're going to equally focus on all three of these sectors and grow and scale our business as well as profitability in the coming year.
Okay. I will come back to this in just a bit, but like I mentioned at the start, I want to focus on certain elements within these three business lines that you have spoken on. First, on the gamified early learning segment, Kidopia is the primary business here. Now, in conversations in the past, we've spoken about the price increases that you've taken through the year. But as I look at the ARPUs in the fourth quarter, I see that has not gone up substantially. You expected this to inch up. Why is that? Why is it that we've not seen that increase? The subscriber base has more or less stayed the same. It currently stands at about 3.1 lakh, if I'm not mistaken. So what is the reason why ARPUs have not gone up? And FY24, do we then see it go up?
Yeah, I think what you need to remember is, as we increase the pricing, it gets applied only to new subscribers. Sure. Existing base continues on the old price and continues to renew the subscription on the old price. So I think you will continue to see gradual increase in it, and we're expecting this to inch up over the next few quarters as it plays out. So I think also, if you've seen, the cost per trial has moderated. It declined further for us in this quarter, and that means margins are again very healthy. If we were to zoom out and look at a LTV CAC equation, it's again starting to look very healthy, and that will start reflecting in our EBITDA margins for this business. If you see the Q4 FY23 EBITDA margin, came in at 18.4%, which was much higher than the 11% in the successive earlier quarter. So I think we also see healthier margins coming into FY24. Overall, we're quite happy with that segment of the business. The other IP we have in the gamified early learning, which is Animal Jam, to the Whiteworks acquisition that we did, also is starting to show good signs of progress. We've started improving margins over there and getting a much better grip of that product. And I think that's another one that will provide a lot of cushion and a lot of progress into FY24 in our overall gamified learning segment.
Okay. One follow-up on Kidopia, and I'm glad that you also mentioned Animal Jam, but in this space, seemingly, the growth in subscriber base has not been significant. Is that at all something that you're worried about, or do you see that number growing substantially in the new financial year?
No, I think, we came off a lot of turbulence because of the Apple privacy policy changes. And I think, the team has navigated those turbulent periods quite nicely without seeing a large decline or, managing the profitability, etc. So I think we're at a very good foundational level to launch for a new growth. And that's what we're aiming for. But we want to also ensure that we maintain healthy margins while chasing growth in this particular segment. And that's what we're currently playing a balanced game. And we will continue to do so into FY24.
Okay, shifting gears and talking about the esports segment then, which has quite a significant revenue contribution. The margins here have expanded quite well, particularly for Nodwin, right? What are the factors that have led to this? I understand that offline is aiding quite a bit in the revenue growth.
Yeah. Uh, I mean, one of the, for Q4, of course, there were more white label events that we did, which normally are, more margin accretive. So that's why you're seeing, higher margins in Q4 as compared to the earlier quarter, or even year on year, it was 2% in Q4 of FY22. Our focus for Nodwin is very strategic in nature. We are the market leaders in India by far, and we want to ensure that in a category like esports, which is a fast growing category, we are the market leaders and we want to maintain a dominant position. So in this year, FY23, we made a lot of investments uh, of creating new, verticals within that business, hiring strong management team, doing certain M&A. So there's a lot of groundwork that we have been laying, a lot of foundational work that we have been laying, not from a quarter to quarter perspective, but I would say with a 3 to 5 year horizon. And that is reflecting in the strong growth of revenue that you are seeing in Nodwin and our esports category overall. We're okay with lower margins in this particular business because we want to dominate the space. And I think, again, going into FY24, that's going to be our approach for this specific sector.
So my understanding, Nitish, is that BGMI Mobile Championship is no longer now part of the portfolio, right? And there are some analysts that have spoken about this and have said that this is a bit of a concern in terms of the growth potential of the space. How would you explain that?
Yeah, you see, having popular mobile esports titles is very important for this business. And in the last year, there was a lot of turbulence because multiple games that were popular got banned by the government, which included PUBG, it included Free Fire, and then BGMI. And that's why we did take some hits, but I would say that we were able to overcome some of these hits because of the 360-degree ecosystem approach that we have built in the esports segment for ourselves. I think for any business, it needs to be for a long-lasting business that can scale. It needs to be able to take such external turbulence in its stride and keep growing. And I think that's what we have shown. We think that either new popular titles will come in, or some of these will get reinstated, which will lead to additional surge in revenues and profitability. Irrespective of that, we continue to build new IPs. Nodwin is currently running a very popular Valorant league in India. So Playground is doing very well, and we hope to launch a season 3. So there's a lot of work we are doing, irrespective of this short-term turbulence that we faced due to BGMI, etc.
Okay, fair enough. I want to speak about ad tech as well, and I think the focus for a lot of people was the loss of that one client, but that was offset. And I'm talking about DataWorks here, but that was offset by the addition of quite a few clients. On balance, do you think that the company has weathered that storm well, and what is the outlook going forward?
Yes, very well. Luckily for us, that particular client was a low EBITDA contributor for us, and therefore there will be no large impact on the bottom line, although the top line may be slightly impacted in the short run. But the company has, appointed forward senior sales folks in the US, has been participating a lot in, relevant conferences and with over a lot of clients. Most of these clients start small and, then build up the business over the year or 2 years. So we think we are very confident of strong growth. They've also launched many products, including MediaWorks and Visible, which are aiding their sales cycle and ability to convert customers. So we are very confident of that business. And within that business, we are also working on some M&A activity to strengthen and further expand their client base.
Okay. Speaking of M&A activity, and we're talking about a business that you have spoken to me in the past about, which is your real money gaming segment. And you've said, if I remember correctly, that you were going a little slow on that business as you waited for regulatory clarity. That seems to be emerging in that space, Nitish. And so therefore, I'm asking you now at the start of a new financial year, what is your expectation or goal for that particular revenue line?
Yeah, I think we feel a lot more confident about the RMG space now in India, given the way the regulatory and tax clarity is emerging. So we are thinking through a three-pronged approach where we are looking at one, how do we scale up our existing business in RMG? It's only about 5% of our revenues, and how can we, give it a much stronger organic push? So there's a lot of activity going on that front. The second is how do we launch and bring to the market new and innovative games that can get a fast uptake and allow us to organically scale the business. And the third is also we are in discussion with many RMG players for consolidation and potential acquisition. So through this three-pronged approach, we are keen to establish and grow our RMG space. We will not take knee-jerk actions, but a well thought out strategy is something we're putting together in place.
Okay, fair enough. I'm zooming out once again to talk about the business as a whole. FY23, you've said, was characterized by the focus on growth rather than on margins, but you've still managed to achieve 10+% EBITDA margins for the full year. What, according to you, is the focus in the new financial year? Do you anticipate that the acquisitions that you've taken in those key businesses will be sufficient to drive the growth, and therefore does the focus shift a little bit back to building on the operating performance, on the margins, because they are increasing, as you've pointed out, in those key businesses?
Yeah, I think two way of approaching this. One is that all our existing businesses, of course, we will continue to focus on optimizing the operations, seeing where we can get better margins. In certain businesses, we may take strategic bets like the esports business, where we may not care too much for the short-term margins and focus on strategic growth. But on an overall basis, we expect that in FY24 we should see slightly better margins than FY23. In addition to this, we will continue to carry out M&A activity, not only at the Nazara level, but also in some of our companies. Like you saw recently, we acquired a business called Pro Football Network, which was run through Sportskeeda. We see many such opportunities for many of our existing businesses to expand, and we are using our expertise and experience to help these teams out to be able to achieve the same.
Double-digit margins then are a given, I would think, but mid-teen, is that something that is achievable?
We usually give our guidance out in September, so I don't want to put too much of a guidance out there right now. I think we may not be that aggressive in margins for FY23. It's still important for us to continue to scale in terms of revenues for FY24 as well.
Absolutely. And thank you so much for taking the time. Nitish, always a pleasure speaking with you. All the best.
Thank you.
All right, viewers, that was Nazara Technologies for you. Do stay tuned. Lots more coming up in just a bit on BQ Prime.